Morning traders, it's 8:01 a.m. on Friday. Happy Friday. It's 11/11/2016 this morning. A quick reminder that it is Veterans Day here in the US, Armistice Day in the UK, and they had their moment of silence at 5 a.m. Chicago time, 11 GMT. It's a day to remember all those who have passed away fighting for our liberties. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall um, view on the overnight session is uh, still responding to the fact that the Dow Jones industrial average put in a 1.2% gain yesterday with a finish at 18,807, almost 808. This is the highest close on record, new all-time highs on that product after much um, much conversation about how the market is likely to correct given the incorrectly anticipated result for the U.S. elections. The market's just simply on a tear. A reminder that although the futures market is not affected by the Veterans Day holiday, and neither is the equity market. The cash treasury market it's a bank holiday, and so that market is closed. So the anticipation here today is that it's not likely that the market will move around too much, but we're going through an unusual period, so who knows, right? But just know that the treasury market, the underlying treasury market, is closed today, as far as I can tell. Um, that's really it. The rest you can find out by checking out your news feed. Today, the key figure we're looking for is the University of Michigan confidence, the prelim number, expecting 87.9 for November, 87.9. That comes out at 10 a.m. Eastern. And then in addition to that, right now, Fed Speaker Fisher is releasing comments at the Central Bank of Chile. Not sure what's likely to be delivered. There was a blurb from him uh, earlier at about 7:30 Central, 8:30 Eastern, stating that the case for gradual hikes remains quite strong, is what he said. The attention is going to turn back to interest rates, and that's what the market is anticipating. And so we're looking at that in addition to the fact that there's an OPEC meeting that has been moved this morning to November 28th. OPEC reportedly moves date to meet with non-OPEC members to November 28th. They're still wrestling with this idea that they're going to limit supply, unsuccessful at this point. Yes, and there is the big Baker Hughes rig count at noon Central, 1 Eastern, although that hasn't been shifting us much at all. Here's what we expected yesterday. As a primary hypothesis, we were looking for a continuation higher. The market was opening above the prior day's range. So the primary hypothesis was for continuation higher towards after a pullback. After a pullback down into the 2153 area, I was anticipating a push higher into the 2178. That did not happen. We had the push down, which is actually part of Hypo 2. I got a question yesterday asking, well, Hypo 1 shows it moving down. Hypo 2 shows it moving down. What's the difference? The difference is how it moves. So Hypo 1 is an open auction that immediately gets responsive and fails back into the prior day's range, pushes to 2159, and then drops to 2153 before the bounce. Hypo 2, by contrast, pushes up to find its sellers, and then the ensuing move is expected to be stronger. That's why it goes below the 2153 and was anticipated down to 2145 or so. 2144.75 is the figure below, is this low volume node below. That's the difference. Okay, so I know it's subtle, but that's what I was anticipating. Hypo 2 was in play yesterday, so as we watch and play back the action here, Hypo 2 was there was definitely a lot of action. Again, the two-tick Renko is very noisy, very busy. But it did pretty much what was expected. So again, Hypo 2, a push up into the 21 above the 20 to the 2174 area, potentially to find sellers, rotate down, push to 59, push to 53, and then push to about 45. And here it is. It pushed through the 2174 all the way up to 2178.50. It closed the naked point of control and the naked close from the 7th. It closed them by the naked close by a tick or two. And then this is what I'm anticipating. I'm anticipating the rotation down. Once we fail at the mid here, then I'm starting to look on the short side. I'm starting to look for these pullbacks. Any pullback that I can jump on after a push, a strong move down or an impulsive move down is more likely than not to pay me something. And the anticipation is it would likely push into the prior day's range. Here's the prior range high, this green line. This is the prior close. This is the prior point of control or most traded price. This is the price that got the most votes through volume. Okay, if we want to stay with the election theme. And so the anticipation is it's likely to push into the range and go and test that area. And so here's what happened. There it is. There's the first target, 2159, and we expect some wiggling because of the point of control. And there's the 2153 right there, and it's pushing right through it. Pull back to 2152.75, try to continue down. And remember, the target below was 2145. It got to 47.75. And then what we ended up getting is a bit of a double bounce here. So I anticipated a push back towards the IB and then a continuation lower because of this impulsive move down. This impulsive move down here. I'm just kind of giving you a play-by-play, probably taking too long. But yesterday had some really interesting price action. There it is. It pushes back to the close. The IB low does not hold. Pushes back to the close. 60.75 misses it by a tick. And now out of the IB again. So high probability touch of 47.75 or breach. And what we got was actually a touch of 47.75 and a bounce, which gives us, there's the 47.75. So now what we have here at 47.75 is a double bottom at the low of day. So there are two stats that play with this: a double bottom at the IB low and a double bottom at the low of day. And in general, these do not stay in place by the end of the day. So I was looking for that break into the double bottom at the low of the day, but the market did not, the participants here did not agree with that. It started to rotate up. Remember, the market does not like to be sold these days. As soon as it has a chance, it tends to pop back up. So we leave this 2147.75 behind, and I put in, and if you get the flex levels, you'll notice there's a double bottom marked for today for yesterday at 2147.75, and that'll remain there until it's breached. This, in my book, remains a weak low until we come back down here and break through. So once the market starts failing back through here, it's trading 2157 and a quarter, currently stuck in this consolidation range from yesterday. Once it breaks below here, I'm going to be looking for that 47.75 to be broken in the next day or so. So that's an important one to note. And as we continue through the day here, let's speed this up. Chop, 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 chop. It starts to move out of yesterday's high, and essentially it starts to look like hypo 1's back on the table. However, it is unable to continue higher. Great effort by buyers. I mean, you look at this thing and it really swung down and moved all the way back out of the range before it just could not muster up the buyers to continue higher. Um, this price action, now, if you've only been trading for the last maybe 3 to 4 years, this price action seems unusual, and it is by recent statistics. It seems like the auction is just frantic. I'm going to tell you that this is what it was like when I started trading. The movement was very fluid. The losses, if you did not jump on your losses and take them off the table immediately, they get quite large. And so I learned to trade in an environment that had a lot more volatility and a lot more direction than now. And this to me seems a lot more familiar than what we've seen, for example, in July and August, which are just horrendous months for me personally, um, because there's just nothing there. It's just dead. So this is the time to really participate. Of course, because of the volatility, you have to expand your risk, but you also have to expand your reward and keep your profit loss ratios in check. And it's also a time when it takes a couple of stabs in whatever direction you want to go in order um, for you to finally catch the trade that works. So what I'm seeing though, because of the volatility, I'm seeing people rushing in and wanting to participate in this, and then doing the unfortunate thing where they're hanging on to the loss and waiting for it to come back because it is volatile, and so it looks like it's going to come back. And then when they catch a winner, they are immediately out, which is the inverse of what could make you money in this environment. A quick look on the daily. So if you recall from Wednesday, I showed this chart a little bit along with the weekly, and I said we broke out of the weekly channel that we've been in, and I'm anticipating a pullback to that trend line, and that was yesterday. So we pushed through on Wednesday, and then yesterday we pulled back to that trend line at the 47.75. It pokes through by a little bit. The trend line's around 48 and a half. That's a very common thing when we do have a break like this. We tend to fall back through and kind of check the line before we move on. It's somewhat of a pattern that you notice across, and I learned it when I was trading stocks. Actually, you see stocks do that often. So what is this formation that we're in right now? What have we done? We've essentially pulled back to about the midpoint of Wednesday's low. We've pulled back to about the midpoint, and we have attempted to make another high. So what we have here is an impulsive move up, a pullback, and a push. However, this push looks corrective to me. It looks like it was unable to push that prior impulsive high, and it's struggling, and now it's pushing lower. Uh, I'm going to show you a real quick. This is a tool that I've been looking at for the last couple of days. This is the overnight session. You could see the drop in the overnight and what happened there. So this is just basically a delta print chart, and it compressed, it consolidated on the European session. So here's your consolidation in the European session, and then we had a breakdown, and what we've done is we've moved up, and what we have here, what it shows here, is the most traded price within every periodicity, and this is basically a point and figure chart, a quarter by 12, just for clarity. It's a kind of a big picture look, but you can see here the market's just completely consolidating at the moment, and it's in another triangle. So we've moved from one triangle in the overnight to the next triangle, and it seems somewhat weak. Okay, so with that being said, The pattern here looks weak because of the corrective action that I just drew. Again, it looks something like this, where the normal pattern is for it to pull back a little bit before the next push up. Remember, the Dow and Nasdaq made new all-time highs. The ES has not. One more thing I want to show you before we get to the hypos is the weekly market profile. We had a very concerted effort over the last few weeks to push down, consolidate, push down, and then we what this is what we've done this week, and you could see that the market's really strong right now. But the thing to take away from here, that 47.75 double bottom that I outlined a few minutes ago, is right in the area of that low volume node at 44, which was yesterday's target, extended target for hypo 2. We didn't get to it. We missed it by about 2 points. But this area here remains important. You got to keep an eye on that. So that marker between 47.75, yesterday's double bottom low, all the way down to about 43.50 is a very key area that remains untested. And so any shorts are likely to target that area today. On to the hypos for today. We can't do that without looking at a different view of the overnight. Here's the overnight session. Okay, you could see that values shifted lower in the overnight. The market's unable to hold on to yesterday's close, which was right here. The market tested up, moved to the point of control, and then had an impulsive move down, held on to the mid here, and is starting to shift down. So again, the open looks somewhat weak. We might come in on the open and push higher again because the market's finding a lot of reasons to buy right now with the change in governance, with the Republican Party in control maybe, or whatever the reason, I don't really care. But I'm seeing a lot of buying pressure, so it might push up. But I'm going to tell you that this low is very much likely to be pushed this morning, the 51 and a quarter, and we have that overnight stat of 97% probability of taking the high or the low, and I'm anticipating the low. So I'm looking to trade early on this morning. Here's where we are right now. The anticipated open is an open auction because we are inside of yesterday's range and value and the 2-day range. Just to see what we've done over the last couple of days, I'm going to separate this area and I'm going to show that if there is a push higher, I'm anticipating that the 2161 area is likely to be to cap buying, and I'm looking for this to push lower, break that 47.75 right here, take a small bounce up, and then continue down to 43.75 and potentially find a base here for a rotation up. That is my hypo 1. Hypo 1 is directing the energy down, is a sell energy predominantly. Okay, that's what we need to take away from that. So hypo 2, if it does sell off right off the get-go, 47.75 becomes the target, and 43.75, 44 is anticipated to be the area where buyers step in. Once it gets back in, 2160, and then I'm looking for it to come back and retest the 2169 point of control from yesterday. That's as much range as I expect today. It is a holiday into the weekend. I don't expect a lot of commitment from either party, and with the higher time frame in control these days, the anticipated action is still looking to be wide and with rotations taking place that allow for a lot of opportunity for risk and reward. Good luck. That's a lot to cover today. I'm over my time by 5 minutes. Hopefully you gained something from this. On your way out, it is Friday. It's like Friday. So hit the like button today so we can continue to move up in the YouTube rankings and get the attention we need when we need it. So hit the like button as you head out. I appreciate it. Take care and have a great weekend.